Okay, so we're looking at the euro US dollar right now, and one of the things that I was hoping for during the 8:30 economic release was some sort of correction on this 30-minute chart to the bottom line of the wave. We didn't get it. We really didn't get much past the current highs that were established. And that's one of the issues you're going to deal with anytime you're setting up swing trades. Anytime you're setting up swing trades, you're really relying on the market, in essence, coming back to you, which in the interest of a swing trade is the prudent thing to do, but it's terribly difficult sometimes, because what you're sometimes having to contend with is the fact that you may not get your entry. You may not get your trade. And I'd rather not have an entry than chase a market. Because sometimes you'll chase and you'll say, oh, thank God I did, because look how much higher or lower the market went. But I will tell you that eventually it will bust your account. For the few times that you're rewarded for chasing a market, eventually it will bust your account. So it's a matter of keeping the good habits, even when it means that you're going to basically possibly miss out on a trade. But bad habits, especially bad habits that are rewarded, are those types of, well, really what happens is you create a memory. You know, when you break the rules and you're rewarded for doing it, the next time you're tempted to break the rules, there's no pain associated with doing it. So you're all too willing to go ahead and hop in the market, breaking your typical rules or guidelines. And that's what happens. You know, you get enough of those type of events that one of the times you're going to do it, and I'm just telling you, listen to me now, believe me later, one of the times you're going to do it, it's going to bust your account. So it might pay in the short term. It might pay on individual trades, but eventually what it's going to do is create a set of habits that will eventually basically nullify any of the guidelines or rules that you typically would have followed, because now you're operating outside the rules. You're bending the rules or breaking the rules as you see fit. And I'm just sharing this with you after observation of literally hundreds of traders and even myself. I mean, we've all done it. We've all done it. The trick is to not keep doing it. So swing trading means I'm waiting, and in this case I'd be waiting for the 34 EMA low, as you can see it, which is waiting at 38.60. Now, am I going to get it? Well, it's 40 pips north of where we are right now. So while I could certainly leave an order waiting out there, and a lot of times people ask, well, what would the order be? Well, on the MT4, it's super easy. For those of you that are still struggling with what's a stop order or what's a limit order, I could sit around and define them for you, or you could just do the easy thing, which is right click your chart, and then you'll see the trading option on the drop down menu. And my cursor isn't exactly where I would want it. You can always adjust that in the ticket, but you'll notice there's two orders I could place up in this area. Okay, two orders I could place up in this area. I could either place a buy stop. I could either place a buy stop at 38.54. Now, do I want to buy here? No. I'm looking to capitalize on a correction and short into it, right? So I'm looking at a sell limit at 38.54 instead, right? So, generally speaking, if you're playing momentum trades, your stop orders are going to do great. In fact, sometimes I'll bracket the support and resistance of a momentum setup with stop orders. But when you're playing swing trades, you're usually going to be parking limit orders at the price at which you're expecting the exhaustion to kick in. So really, that's what I'm looking for. Looking for exhaustion, basically, to kick in at that 38.60 area. That would be a sell limit. I'm going to take some time here, and try to make a conscious effort to talk about the actual orders, because a lot of times that's probably one of the most common questions I get as far as how to execute trades, because far too many traders, in my opinion, rely heavily on basically instant execution, which is fine, but if I know that I've got an exhaustion point on a chart, and I'd like to take advantage of that during what could be a volatile economic event, I'm probably better off parking that order using a limit than I am trying to get a market order. So while I have nothing against instant executions, I kind of call that the knee-jerk trade, because instant execution is like, oh my gosh, my trade's here, and you click the button. So I think there's not a lot of proactivity to that type of order. And let's face it, there's a handful of sane moments in your trading day. You and I both know that. Anyone who's been trading knows there's only a handful of sane moments in your day. And I think any time before the actual trade entry is about the only time that you're sane during the day. So why not do as much as you can, lay a groundwork, set your plan while you are relatively sane, right? So that's what I would highly recommend.